So let's talk about the mining space that's getting crushed right now, Lawrence.
Yeah.
But as you say, it's a buying opportunity. Why the pressure on the miners? I mean, at 1,700 gold, it's still a good operating price for them.
It's a great point. I mean, I was trying to say that to people who I was just at Denver and Beaver Creek gold shows. I mean, the miners in general are kind of like, hey guys, this isn't so bad. I mean, if somebody 2 years ago had said to us we were going to be at $1,800 gold in a few years, we would have said, hallelujah, that's the best thing ever.
That's right.
And so we're at 1,750, 1,800 gold. I mean, miners are making a lot of money. The industry average ASIC is $1,000. I mean, you're making 800, you're making $800 on an $1,800 sale price. That works. It completely works. You got big cash flow. So the miners are fine. Now the stocks, on the other hand, what the stocks are doing is the stocks are accentuating the narrative that says, oh no, inflation's not persistent. It's transitory. It's going to go down. And I saw a lot of people there from Toronto and other places building models where they said the future gold price would be 1,650. There's just no way. There's just absolutely, in my opinion, there's just absolutely no way we're going to lower gold prices than where we are roughly now. We're going to 2,000 and then we're going to 3,000. And when that occurs, it's going to be outstanding.
But even, Lawrence, even if it were to go to 1,650, heck, even if it were to go to 1,400, aren't most working with an all-in sustaining cost of 800, 850, 900?
Yes, that's exactly right. I mean, it's, look, if it were to go that low, some of the marginal companies would have serious trouble. And there are marginal companies, right? But the average gold company would be absolutely fine. They've had a long time where they've cleaned up their balance sheets, they built cash balances, et cetera, et cetera. They know how to run these things well, and they've shown capital discipline. So for the first time in a long time, the gold companies really are in an outstanding position. And more importantly, they're cheap. And, they're cheap at today's gold price, and they're going to be, super cheap, at future gold prices. I mean, looking at my portfolio, looking at the good names that we hold, I think we have 2, 3, 4, 5 baggers laying around all over the price. Not if we stay at $1,800 gold. If we stay at $1,800 gold, my sense is, and the multiples don't expand, my sense is, we could earn 30% a year on these companies as they grow their production. But if we get to $2,000 gold and then to $3,000 gold, I mean, these things are going to explode to the upside. My main focus, my job, what I've been tasked to do is to try and earn good returns for my investors, which is what I work at every day. And, I move around. I'm not wedded to any one specific part of the market. I mean, as you know, there are developers and drill stories and seniors and juniors. And yeah, the sweet spot tends to be the junior that has production, has positive cash flow, has a mine or two operating, and is using the cash flow to build mine number 2, 3, or 4. So they're growing their production, and they sell at a low multiple of cash flow. That's a very powerful combination because a higher gold price would mean profits will go up. Additional production in future years means they'll have, bigger profits just on the number of ounces they're selling. And then we're going to get multiple expansion. I mean, if they're selling at 3 times, cash flow today, and this becomes a hot area, which I think it will when gold breaks over 2,000, those multiples are going to expand. They're going to sell at 6 times cash flow. I mean, I remember 2011 when things were selling at 15 or 20 times cash flow. Now they were overpriced at that level. But the point is, if we go from a multiple of 3 to 6, there's a doubling, even if you didn't have a higher gold price or you didn't have more production, right? So you can see the math of how we get to, doubling, tripling, quadrupling your money. It's not crazy. I mean, this is not a pipe dream. And we need higher gold prices for sure, but it can happen. By the way, the state is who keeps messing us up. They keep changing the damn rules, and they keep ruining the narrative. I mean, these people are bad people. They're causing, they are. I just have to say it. It's a fact. Yeah. They are causing the middle class to suffer. For Jay Powell to say that the Fed doesn't create wealth inequality, that's just complete and utter bullshit. They're all pretty damn bad. I mean, somebody says, who's the worst Fed governor? I mean, honestly, I think the guy that, look, Jay Powell's pretty bad, but to me, the person who was kind of the intellectual forefather of this, a little bit it was Greenspan, but when Ben Bernanke did his helicopter speech and basically said, hey, look, we can print as much as we need with no consequences. That was just a really, and by the way, the Washington politicians, they're just the guys who look in the rearview mirror. And even Cheney said deficits don't matter. Well, I've long said and this is my New Orleans speech, the way I look at this is, these fiat guys, these are the guys who jumped off the 100-story building and said, I can fly. Okay. And they're flying right now. but they're getting close to the lower stories, right? And they're saying so far so good, and I see the splat. It's coming. It's coming. The confidence in fiat is going to ultimately explode and burst, and that will be the end game. And when it does, gold's not even going to trade at 3,000. Gold's going to trade at 15 or 20 or $40,000 an ounce.
How far away is that reality for you?
I don't know, and none of us do, right? We're just looking at the slopes of curves and the derivatives and so on and so forth. It feels to me like it happens within a 5-year window. It feels to me like the pace is quickening with each thing. I mean, we had the '08 blow up, so it's 12 years to this one. Maybe they'll get this contained. I don't think they can blow a bubble at a higher level.
Yeah.
I mean, there can't be a Mars bubble, right? So I feel like they will keep hitting the guardrails here, back and forth, inflate, deflate, inflate, deflate, inflate, deflate, and more people will kind of move into our stuff. And as our stuff gains more and more momentum, they'll have a real problem. If you kind of look at the 70s market as an example, remember gold was $35 in 71. It ended the decade at 800-ish. It went up and it did a midpoint correction, which we've already had. That was what happened from 2011 to 2015. So now we're in the next wave up. And it's gonna get going faster, is my estimation. So I would say at the outside it's 5 years. It could be sooner. It could be a little longer. But I think that eventually this system is going to completely blow up. And that if individuals haven't protected themselves with real assets and sound money, it's going to be very financially difficult for them. And I think it's really sad, but it just is what it is.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.